All right, welcome to Mind Over Matter, the psychology of trading. I'm Cedar, and we've got D Cruz here, and I think we got a couple other guys. Not sure if they're gonna participate or just here trading on voice, but um, wanted to kick today off with at least we have some kind of price action. We've had a couple of days. Well, really, we had some adventure yesterday afternoon, but we've had a couple days, Friday and Monday, that were just slower than molasses. They were very frustrating, and I barely traded, like definitely a small volume. And so I want to talk about the sit out power a little bit and just kind of how we're thinking about things. And I've posted a bunch about it in the server, but Cruz, I wanted to get your feedback because you're also very good at this. Ben as well. Shadow just comes out of nowhere, like at the perfect time with his trades. So I'd love to talk about that a little bit more in depth. We talked some last night in uh, the Tuesday night trader education stream, and I'll get that posted in the psychology channel. But I wanted to talk a little bit more in depth about how we're using our self control, our willpower, to sit tight on the times that are less likely to be our more profitable areas instead of just over trading ourselves into a hole.
Yeah, it is really hard, to sit out because of course we wake up wanting to trade and whatnot. But there are those days where it's better to sit out or at least wait for, like kind of yesterday was a good example. Like kind of wait till the end of the day, and that's where it really, I guess you could say, paid. But it's really it is hard, but I mean it goes hand in hand, I guess, with just preserving also. You don't want to really get too far ahead of yourself on losses on days that shouldn't be traded. Um, Specifically, like FOMC, Fed days, stuff like that, or even just short weeks like this week, kind of what we're experiencing with the Easter holiday coming up.
Yeah.
So market is closed on Friday. So we know already in the back of our head from doing this for a while, we're looking for, or we already know what to expect. Just a bunch of consolidation, lower volume, less moves, whatnot. So and that's kind of what we've seen today. So and it's really all week, but it's really important to sit out in this because not only to preserve your capital but also to preserve mentality because you'll be in a trade and you're kind of stuck here all day and it's just really kind of getting data decayed or whatnot. So buying time if you are trading this is pretty key, and just wait for those solid setups. But great time to go do other things that you need to do, and trading is always going to be here as long as you allow it. So it's just wait it out.
And I talk about this a lot, like waiting it out. We want to just keep reinforcing that when you're in a choppy zone, we had two 5 point ranges that I literally just drug forward from Monday to Tuesday and just plopped them over. If you are trading a consolidation or a range area, you want to probably, or at least I do, focus on trading one direction. If you're trying to trade it back and forth, a lot of times I see traders just absolutely get chewed to pieces because of the whole loss cycle that happens in trading. And I've got a post about that in the Psychology of Risk Management channel. Essentially, to just break it down really quickly, it's the trader enters the first trade impulsively, and then there's a loss. And then trader enters second bad trade, bigger loss, right? So you're just chasing it back and forth. It's like the ball game that never works out. And then trader gets fearful and lets the one setup pass without pulling the trigger. And then the trader asks, why do I always miss trades? And what I put was wrong questions, wrong solution focus, or wrong answers. So if you're getting chopped up, you're depleting your mental capital. So you're not making good decisions. So then you're scared or fearful. The term fear for me is right after greed. So I think greed is the number one cause of losses from a trading portfolio perspective. And fear happens right after you had the losses. So it's this vicious cycle. So then you're scared, you don't enter anything. And I think it's critical that when you're analyzing or looking at what you're doing from a journaling perspective, you're clear on what's causing your losses. Not that you took losses per se, and you definitely should be journaling losses and wins. I have a couple of coaching clients who, when they first started, were only journaling their losses. They'd only get serious about like, okay, I took losses, here's how it happened, which I guess is better than only acknowledging wins. But what happened was that puts the focus, the energy on loss instead of on probabilities. It's just probabilities. What am I executing well? What am I not executing well? What time am I trading well? When am I clearly never going to trade again? Kind of times, or at least right now until something changes character-wise in the market. So it's really important that you're journaling. I use one page, an entire page of paper per trade. And if it's, a 5-minute trade, then that page is short and there's not a lot of information. I might write myself some more observations after I close the trade out. But that way I can go back and look at them stand alone and go, okay, these things I'm doing well, these things I'm not. If you can't identify that, you're like a boat with no sail and no oars. You're just getting tossed around to wherever the current or the wind happens to push you. And that's a scary deal if you're talking about it from a business perspective. So what stuff, Shadow and Ben, if you want to chime in on, some of the things that you've observed through journaling or through, paying closer attention to what questions you need to ask yourself. Cruz, anybody?
So
I can go
oh
on
no,
for days journaling. So,
Right. Well, you've got the Trader Forge program available for members, and it's actually available to the public as well. But all the tutorial videos are in our premium service because it is a very, very in-depth program. And there's so many data sets there that you can dig into that and figure out, like Shadow, you just suggested you're trailing from a $3, or not trailing, your hard stop from a $3 to a $4. Your win rate went up. So maybe talk about that because I think that's really relevant. I personally think a $3 stop is too tight. It's just they end up just getting stopped over and over and over again. But everybody has their own trading time ranges, their own risk tolerances, all of that. So I would love to hear a little bit more in depth. I know you've done your Trader Forge, your recent one in the trader education stream, but I think it would be nice to have in here.
absolutely. You know what? When I first started off trading, that was like the number one thing I did was track trades. And even then, it took I would say almost a good solid 6 months before it finally sunk in exactly what the data meant. What was I tracking really?
Yeah.
And I think the big thing is it's like we trade, we learn a skill set like recognize patterns or candlesticks and stuff like that, and then we start building trading habits and strategies. And so from there, instead of just focusing so much on trying to come up with the most perfect trading strategy, I just focused on, look, this is how I'm entering the trade. This is where I'm comfortable and like intuitive entries. And so what I did was I just built the risk management parameters around that and just tested, said, okay, I'm going to try back testing 3-point stop loss, 4-point, 5 points. And I kept tracking the low and the high of my entries until I came up with the 3-point stop loss for futures. And when I did that back testing, that was back when price action was on ES was down in the 4,000s. And now we're above 5,000. The average trading range is higher, even though the percentage is still the same, the moves. But, it had to notice I was getting tagged out a lot more on the
Yeah.
3-point stop loss. And so it was time to go back and say, okay, what's wrong? And I'm looking back at the trades and I'm seeing a lot of, barely tags.
And when you say tagged out, the trade ended up going the direction that you thought it would go. So it ended up working out in your favor of what you predicted as direction. With futures, it's either long or short. And that's the type of stuff. That's why it's awesome to hear you talk about that.
Yep. And so it like this right now we're running a 4-point, and I'm still doing back testing with 3-point, 4-point, 6, 5, 6, and 10, and comparing each one with each other, and saying okay. And you also have to take in the mental aspect of your trades too. For instance, like a 6-point stop loss actually has a 1-to-1 6 points stop loss with a 6-point profit target has a really good, I mean, sorry, 5-point, has a really good win rate, but
Lower return.
lower returns. And then same thing with like going to like a 6-point and 10 points. It has a better return, but then you have to suffer a lot losses.
And that
taking
is
that in,
those hard stops are different than what I do in my trailing. So what Shadow does is he sets a hard stop and it either hits a profit target or it hits the stop. And what's great about that is it takes out any impulse. So the tighter stops are nicer on those because you don't have to be making decisions. And I have seen you exit where, you know, you're like, okay, it's we're, you know, didn't quite make it to the second profit target, but I'm seeing it stall here, so I'm going to go ahead and exit it. So it's not always on the exit part, but the hard stop piece stops you from just adding and bleeding and things like that. It's huge.
yeah, and you always see me take out either the stop loss, break even, profit target 1, 2, and 3. I can't remember the last time I just got out of a trade and just out of a trade that didn't hit one of those.
Right.
And the reason why is I like obviously I love data. So by doing that, it allows me to have a data point and saying, okay, this is my numbers. If I went just 1-to-1, I have a 75% win. Like right now, the 1-to-1 4-point has a 75%. And then the
Awesome.
2-to-1 has like a 65%. So 8-point profit target versus 4-point profit target. So I can balance them out and say, okay, there's a slight chance that it might not make it to 8 points, but there's a 75% chance that my trade is going to go to 4 points. And it's totally fine if you want the high win rates and you want to keep your mental clarity from not taking so many losses, then that's perfect. And you can just maximize your 1-to-1 over time by increasing it to maybe 5 points or something like that and stabilize the numbers. But
So what's important
is
to note here is that you're moving your trailing stop up to break even. You're moving your trailing, or you're moving your hard stop. Since it's not a trailing, you're manually adjusting it up to protect the profits
Yep.
in the trade. Where if you had a 3 or 4-point trailing stop, those will get taken out pretty easily because it follows the price in the direction and then doesn't give it the room to be able to breathe, to be able to have the chance to be able to have the TA play out. Where mine is a wider stop, so I have a 10-point trailing stop that comes behind as an emergency. So if we find some big weird news volatility, you know, unknown random things, it will protect me from massive downside, and I hardly ever let them trigger. I'm still hand managing the trade, but it's really important that you have something there, especially in futures, and that you're trading off the levels. And that's the biggest part. What you're hearing Shadow say is he's setting his stops not because he wants to make that much money. He's setting them because those profit targets, when he's analyzing the trade, he's looking at it and saying it's likely to make this 8-point move based on the levels that he's doing in his TA, not based on how much money he wants to make, because the market is going to do what the market's going to do. It doesn't matter what we want, need, any of those things.
No, and just collecting trade data, it clarifies the mind and gives you a perspective because we're so focused on that single trade, and by tracking your trades, and you're able to, instead of just looking at the leaf on the tree, you can actually zoom out and see the entire forest,
Yeah, AKA
And
look left. Yeah, zoom out.
Yep. And so like my mind shift, going 6 months into trading was not so much as individual trades, but looking at like, hey, if I lose on this, I made money. If I win on this trade, I made money, because no matter what, as long as I follow my risk management, follow my rules, my trading strategies, trading plan, no matter what, I'm going to make at least 1 R with a 50% win.
Yep.
And over 1,000 trades, that's 500 R in return, or at that point 3 points. So that's 1,500 points made over 1,000 trades, win or lose. So changing the perspective of just a single trade on its own and seeing
It's
all
that
your
whole
trades
concept
in a grandiose plan.
of building your trading business brick by brick. It's a long game
Mhm.
for you and your family. And I say you have 7 kids. It's a lot.
Mhm.
That's a lot of shoes and clothes and things. And this is how you make your living. Although you're working back in your industry for a little bit short term, you are a full-time trader, and the long game is the key. Keeping that perspective of the long game, not trying to get rich quick. It's a get poor quick if you're going to do anything quick. It's literally lose your money fast instead of get rich quick. Cruz, how about you as far as managing your stops on your options and your futures? Probably more options since we've talked futures some.
Yeah, sure. For options, I try to time exit or entries really on with not much downside room, if that makes sense. So I'll take a tight entry on say a major demand zone where I know we're going to see buyers, or just like a VWAP entry to where there'll be a quick invalidation point. That's kind of what I've been moving towards, and keeping losses a little smaller by doing so, because once we have say a major invalidation, I mean it'll be known on the chart, and it's just easy sell opportunity. And then you'll have your same trigger on the re-entry possibly. But I've been trying to do that and give it a little bit of room, of course, with 30-minute candle closes. But I've been really trying to work on more accurate entries like that. So it's and then for futures, I mean, yeah, I've been kind of experimenting with some things, but kind of same idea. Just kind of tight stop loss to where I could always just re-enter and just always try to hit entries on really high, um, I guess, high confluence point for me, if you will.
Yeah.
Just area where I really love.
Ben, anything to add as far as managing trades? And you trade a lot of 0-day QQQ and been doing a little more foray out into other tickers. So love to hear your feedback on that.
It's actually quite similar to Decruise. I do like, for example, QQQ. I'm always trading on price imbalances, so I always try to time a good entry and have my stop usually at the invalidation of that price imbalance, which I like to do like a 15-minute candle close. So generally keeping the losses small. So it's kind of the same concept. Even today with a ticker like BMY, I took the put on the level of rejection, and then as we start moving down, that's going to be my stop. It's going to be that level above us. If we clear back above it and close, then I'm out. So I try to keep very, very tight stops, but not it's more of a mental stop. I want to see a 15-minute candle close or something like that to tell me that it's invalidated.
So do you use a trailing on the account, or you're just really good at being able to make yourself follow what that invalidation is? I think this is important because some people are not. And if you are, I think that's important to know.
Yeah, I've tried doing trailing stops. I've tried multiple things like 20% stop loss, 50% stop. I've tried many things, and I find this to be the best, is just to manage my own stops mentally and be able to decide, this is invalidated, okay, I'm out. It doesn't matter what happens after that. I've always found that to be more useful.
So these are things, if you're listening, you need to ask yourself if you're finding yourself not respecting what your TA is, what that trailing needs to be, or the levels need to be to invalidate your trade. That's something you need to have written down. And I talked about this a little bit last night. Before I enter a trade, I already know where my stop is. I already know how it's going to be invalidated, what price action would happen, or what levels from a 30-minute candle close typically for me. So really important that if you are not respecting a mental stop loss, that you get some kind of stop loss in place, and it is what it is. You're not adding to it, you're not moving it. If you have stop losses and you're finding yourself moving them, well, you know what the outcome of that is, right? Usually not good. If it ends up working out for you one time, it will come back and bite you the next time. So definitely very individual.
I actually find that if you do end up averaging in or anything like that, or you move your stop and it works at that one time, it's actually very toxic on you because in
Oh
the
yeah.
next trade you're gonna try to do it
Then you think
again
it's
and
going to
again
happen.
and again.
It's
Exactly,
the
yeah.
addiction to random rewards. It's just
Exactly.
gambling.
Yep, just take the loss and polish up entries, and that's why I like really just revolving strategy around that, like invalidation, because then you do have those plays that typically go down, you know, like 50-60% sometimes, and market flips, and we have plenty of time. Say it's Monday with the Friday expiration, and there's no reason to really sell that because chart's not telling you to. You just had a bad entry, and that's what you really have to polish up, right? And it's just easier to kind of just focus on that, I think, and just be a little bit more patient because a lot of the times with my losses, anyways, just being totally transparent is I'll enter too early with either in the middle of a range, or I'll just be a little impatient, or I'll just or just not wait long enough for confirmation. So as long as you know as long as I find myself waiting long enough for that and just giving the day long enough to kind of reveal what it wants to do, I think that's really key. And that's just working on patience and just letting the chart tell you when to sell and when to buy, and just being patient enough and holding your emotions back of just the natural human emotions of wanting to make money. Just there's just a little bit of greed. There's just you're almost FOMOing just with seeing any move, but you just got to tell yourself, all right, just be patient. We're gonna have plenty of moves. Like for example, this morning we had a nice sell right at 9:30 all the way through 10 o'clock, and now it's just been chop. If we missed that move this morning, there's a lot of chop within this, with these candles. So it's hard to play that unless you're quick, but patience will be rewarded. We'll see that end of the day. I'm sure we'll see another move. I doubt we just kind of hang out just right here. We could, but I mean, just being patient for that next move, not getting ahead of ourselves, getting into something, and really just letting everything play out and pan out for us, and just letting the day tell us where it wants to go, not what we think, and trying to form a bias. That's
It-
the worst thing to do.
That goes back to cash is a position. If you're struggling with that and you feel like you have to be in a position, cash is a position and you should definitely be respecting that. So I had a quote that I posted in the psychology channel that I kind of wanted to wrap today up with. And I have a link. I'll reply to it when I post the link for this video, just so you can go, it's not me saying this, this is someone else. I don't play poker. I mean, I do play poker a little bit, but not for money. I play cards for fun. So it says, quote, poker players can be miserable pricks. I've been one of them. Anti-sweating some regular that I don't even know. Celebrating when they get too outed in the biggest spot of their career. The epitome of Schadenfreude. I don't know how to pronounce that. Wow, I just realized the first time I've ever said that out loud. It means the pleasure derived by someone or another person's misfortune, for those who may be unfamiliar with the term. It's pretty messed up when you think about it. Over the course of many years, it's something I actively attempted to cut and to instead take inspiration from those having success I could only dream about. If they can do it, why couldn't I? Listening to Robert Greene several months ago, he tossed out a phrase, Mitfried, coined by Nietzsche in 1878. Directly translated, it's joy with, meaning that we literally feel joy when other people have something good happen to them. It's easy when you see a regular playing your stakes bank off a six-figure score to think, damn, they run so good, why not me? Do you even study? Kind of questions like that, right? So these are all the things that other traders do to each other that I see happen all the time. Saying negative things, taking fade trades, things like that. So continuing with the quote, if you can flip your mindset to truly be happy for people who have success, I believe it not only makes you a happier person, but someone who is more likely to enjoy their own success stories, not just in poker, but in any walk of life. So my comment on that was, while it's not about trading, there are many similarities between professional poker players and professional traders. It's about probabilities, right? Add this to the category of you get what you spend energy focusing on. So not just journaling the negative, not just journaling the positive, but genuinely rejoicing in others' success and not just, you know, like I'm going to fade that person. I see it a lot more than I would like to between different venues, sometimes in, you know, uh, like finance space, sometimes here. Really important that you're finding your own way, that you're really in your grind that you need to be successful, and that we're working together as a community, that we're collectively growing, and that you're not hurting yourself in general because you're so worried about what somebody else is doing to prove them right or wrong or whatever that is. And this was a post I put up. When did I post this? January of this year. I was seeing it a lot then, and I'm starting to see it a little bit now too. And we've got the combine coming up. It's really important that you're not thinking of this as competition against everyone. It is a competition against yourself. That's it. Better than you were yesterday is what you need to be focused on. Critical. Better than yesterday. 1% better. You'll be there in no time. All right, with that, I'm actually needing to hop off. I'll go ahead and wrap this unless do you guys have anything you want to add just to kind of finish up this session? Okay.
No, that's everything that I had. Besides, I'm out of my ES lawn care. Yeah, no, we're covered up pretty much everything
Nice.
today. Was
Awesome. All right, we'll see you again next week for the next episode of Mind Over Matter, the psychology of trading. Thanks for hanging out with us, guys, and we'll see you on the trading floor.
Appreciate it, Cedar.